Ladies and gentlemen, good day and welcome to the GULFOIL Q2 FY21 earnings conference call hosted by YES Securities. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prayesh Jain from YES Securities. Thank you, and over to you, Mr. Jain.
Thank you, Stephen. Good evening, everyone. Hope this call finds you and your family in the best of health. At the outset, I would like to congratulate the management team of GULFOILLUB Lubricants for a strong performance amidst these tough times. From the management, we have Mr. Ravi Chawla, who is the Managing Director and CEO, and Mr. Manish Kumar Gangwal, who is the CFO. We thank the management for providing us the opportunity to host this call. I shall now hand over the call to the management for opening remarks, post which we'll open the floor for Q&A. Over to you, sir.
Thank you, Mr. Jain. Good evening, good afternoon, and good morning to all of you, and thank you for joining us on this call. We hope each of you are safe and well in these unprecedented times. Well, I would like to start the call by we are all delighted to share that the company has recorded all-round growth in July-September quarter, and we have delivered significantly improved numbers based on the many initiatives to drive up our volume growths across all segments and to continue our cost prudence measures. Really, this has been very gratifying for all of us, and you may recall in the last quarter statement we had said that demand conditions are improving and showing revival, and we are really pleased that with the volume increase initiatives, the cost prudence and other campaigns, GULFOIL has posted the highest EBITDA and PBT and the margins, and definitely you will see that the bottom line and top line parameters have been very good for us. We're really proud of the team, our trade, our business partners, who have all worked relentlessly and innovatively to achieve these record numbers and deliver this performance in the midst of these challenging times. I think the various segments that we had, we could sense the demand and really put in initiatives right across every segment, which has helped us. And the cost management, the prudent spend of A&P, while we've been investing, we have been able to do that. Definitely helped by a lot of the cost management, right from raw material to other costs, has helped us. And this has really been good for us. I'm happy to share here that the volumes have actually crossed the pre-COVID levels. We have recorded a 7% growth in our volume in this quarter, at the company clocking 29,500 KL versus Q2 last year at 27,500 KL. So that's 7% growth. Well, we have had a mix where we have seen a bit of extra in terms of the B2B, but again B2C, I must share with you that again September secondaries were one of the highest, and we had innovative scheme linked to our CSK and MS Dhoni tie-up, which helped us to have both good primary and secondary in channel retail. We've also seen the FWS business, which had touched an all-time record this quarter. And we've also seen factory fill now coming back to our 5% level. And of course, there were some pricing actions in retail, but we have been able to also deliver some of the best margins in terms of EBITDA. And this has been the highest September ever for us. And as I earlier mentioned to you, the highest profitability we have had. And Manish will later explain on the PAT and other things where last year there was that benefit which we got. Also, our industrial distributor business, which is part of our focus on B2B, really picked up and had an all-time record. And again, cost optimization measures in every major line items, including A&P, where we did invest with the IPL campaign. But as you know, below the line and travel, etc., didn't happen, so that was definitely a cost saving. But focus on social media really helped us. And all this has enabled us to turn in a record performance. We are very happy that demand shoots in the industry for organized players, for whoever is seeing that we are able to bring in a robust demand sensing model has done well. And right across, we have seen this demand conditions being very positive in the last quarter, and we are seeing the trend continue. Thank you very much. I would now like to hand over to Manish to cover some of the other points on the business and of course the financial aspects. Manish.
Yeah, thank you, Ravi. Good afternoon, good evening to everybody on the call, and thank you for joining this. And I also hope that all of you and your families are safe in these tough times. I would like to reiterate what Ravi said that yes, it was a very strong quarter for us, and both on the top line and bottom line front, we have done well. And to clock in more than 400 crore of revenue again in this quarter is really heartening. And it was an all-time high in quarter for us in terms of both PBT and EBITDA, and also the EBITDA margins. At the same time, on the balance sheet side, we continue to remain debt-free. In fact, now our net cash position is close to 300 crore rupees as compared to the year when it started. It was around 200 crore at the end of March. So we have added close to 100 crore in our net cash position in spite of all these challenging times, and we have really focused on working capital management, and the businesses have delivered excellent growth. And the impact of all this is that we have generated close to 133 crore as cash flow from operations during this H1. You will remember that last year company has generated 237 crore rupees of free operating cash flows, and on top to generate this kind of cash flow is again really heartening, and it shows that the business has, the partners of business has the confidence in the business and the brand. With that, on that note, I would now request for a Q&A, please, if there are any questions on the performance. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya M. from HDFC Bank. Please go ahead.
Yeah, hi, congrats on a strong result. Can you throw some light on factory fills? What was the growth out there, and what is it as a percentage of our mix? And also on the B2C, how have we fared on PCMO and both motorbikes? And maybe if you can give us some mix. Thank you.
Yeah, so the factory fill business was quite down, as you will remember, from second, third quarter of last year itself. And quarter one actually was almost negligible. So as Ravi mentioned in his opening remarks, we are happy to share that that business is now back to 5%. You will also remember that usually this business for us is around 9-10% of our total mix as a segment. Right. But it is back to now 5%, and we are quite hopeful that as we move forward, the production with our OEMs will continue to grow, and that will further bring the volumes back to us in terms of factory fill. Overall, in terms of our mix, the mix is more or less similar, but quarter one was a large agri which was constituting the overall mix, which was part of diesel engine oil. Hence from that perspective, the diesel engine oil is now close to 36-37%, which is our usual one. And then we have personal mobility around 24% in this quarter, back to back from it was down to 20% in quarter one. So from that perspective, the mix has come back to what it used to be in the normal times, except that PCMO is still slightly lower. PCMO is passenger car oil, which is still slightly lower as compared to our usual times, because especially the mid tier 2, tier 3 cities also, they are still under a sort of lockdown, and work from home is still continuing in many places, and hence we are yet to see that full recovery in PCMO, but it's growing month on month in terms of recovery. And I hope I have been able to answer your question.
Yeah, so just to add to what Manish is saying, local transportation is shut down everywhere, and personal mobility, people are using their bikes and cars, and certainly MCO has picked up, and as Manish said, PCMO, as we see that more economic activity picks up, offices open, even that should come back. But certainly MCO, both urban and rural, we have seen a good lift, and including our bike stops. So really, that is going well in terms of the demand trend.
Okay. And any market share gains, if you may, would have had, I assume, in the quarter?
This annual year, our estimation is that the market will be down double digit, right, Manish? That's what we've been gauging. We don't have, so far it is double digit negative, the annualized. And for us this quarter, we have gained 7% overall over last year quarter. So, you can do the math. We've always been, saying that how do we outperform and do to the market growth. So definitely market share gains quarter on quarter. We'll have to see how we can build these. And this quarter, which has just gone by, has continued our trend of being ahead of the market by 2 to 3x in these segments.
Okay, so you've gained 7%, you said.
So 7% is over last year,
Okay.
quarter on quarter growth. So 7% is the volume growth for us as a company. And the market share growth will come obviously when we grow ahead of the market, right? So the market is down.
Okay, got it.
Yeah. Thank you, Arvind. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Malav Simaria from Ceiling Capital Partners. Please go ahead.
Hi, thanks for this opportunity. A couple of questions from my end. So, could you please throw some light on the amount of advertisement?
Mr. Malav, can you speak closer to the handset, please? Your voice is not audible.
Sure, is this better?
Yes, sir.
Thank you. I had a couple of questions from my end. Firstly, on the advertising promotion spends, could you please throw some light on the absolute amount you spent this half year as compared to the half year previous year? And secondly, if you could provide a mix of how much of this is ATL versus BTL and how does that compare with other players in the segment? Thank you.
If you want to go with then I'll add.
Yeah, so basically, as far as A&P is concerned, in these tough times, we have rationalized our expenses, as we all know. And usually we were spending 5 to 7% of our top line back in the brand over last many years, if you will recall. And with these challenging times, we have recalibrated that. But in this quarter too, as Ravi mentioned, because of the IPL related, Chennai Super Kings related promotions, and we have spent more than what we did obviously in Q1. So we are back to now close to 3% in terms of our spend on the A&P for the quarter. Yeah, Ravi, if you want to add, please.
So, Mr. Marikandan, if you will recall our calls in March or April, we had done a brand track where Gulf is actually emerging as the second brand overall in industry. We had shared this. And you see, as we calibrate, obviously below the line activities have stopped completely in quarter one. Quarter two also below the line is very less because of safety and other parameters. And we have been mostly focusing on our social media and IPL, as Manish said, we had a campaign going for consumers and for our trade, which came in September, and then of course IPL continues. And we have also looked at our share of voice and share of expense of competition. So competition, while there has been some spending by one or two other competitors, we normally track this, and everybody has calibrated. So the entire industry, as you see, right across, even not only lubes but others, A&P investments in ATL, of course, will be limited, very limited. So as we go forward, we continue investing in our brand. And Manish mentioned the range to you, what we've been doing in the past. So we will continue to calibrate and see where we want to be in that range, and continue to have programs that will support our brand both above the line and below the line. Thank you.
Sure, thank you. That's helpful.
Thank you.
Thank you. The next question is from the line of Manikanta Gare from Axis Capital. Please go ahead.
Good afternoon, sir, and thanks for providing me the opportunity, and congratulations on great set of numbers. Wanted to ask a few questions here. Sir, firstly, Manish sir was mentioning the split between DU and PCMO. Is it possible to give the split between industrial and other products also along with that? That's the first question. And second question is B2B and B2C mix. And the third question is there was a news release I think in September with respect to the strategic partnership with Soil. I wanted to understand how we are looking to improve this relationship and what sort of growth can be expected here. And the last question is obviously on the new businesses that we are trying to increase our share, which is two-wheeler batteries and the discussions with EVs, the EV OEMs in terms of providing or supplying them also with the loops?
Manish, you want to go with a few, then I'll join.
Yeah. So as far as B2C, B2B mix is concerned, it is better than quarter one, and we are at around 61% B2C and 39% B2B. This quarter was a very good quarter from B2C perspective, so it was 63-37. So from that, it's slightly still in that 61 range, but our range has been around 60 to 63, 64. So we are back in that range as far as the B2C, B2B mix is concerned. And from the product mix category, as I mentioned, 36% around that, DEO, personal mobility around 24%, industrial around 15%, and others at 25%. So that's our broad mix. And Ravi, over to you for SOIL and other new businesses initiatives, please.
Yeah, so SOIL, you see, we have a more than a decade-long relationship with SOIL regarding base oil, and we use very high-quality base oil from them consistently for some of our products and most of our products which require Group 2, Group 3. And you see, this relationship we have continued now to basically launch SOIL products which are being made first time outside Korea. And they are looking to get into the various automotive segments into the Indian market. So it's going to be a small sort of launch which is happening. It will be available in the trade. And in addition to that, SOIL products are well known in the PCMO range, and they also have very good usage with Korean OEMs in right across in South Korea and others. So we believe the relationship definitely is a win-win relationship, and we can grow together and see some benefits in terms of both market share and be able to bring in products which Korean OEMs and top of the line products also which can be brought to the Indian market. So it would be a good win-win partnership for us going forward. I think the other question was on batteries, right, Manish?
Yes.
Yeah. So batteries, we have seen good growth. We have two-wheeler batteries, the same brand name as Gulf Pride. I'm sorry, I missed your exact question on battery. What were you trying to? Yeah.
Sir, I remember you mentioning during Q1 that you have seen significant increase in demand for two-wheeler batteries. So is that continuing, and are we continuously increasing our market share? Because I remember again 3 to 4% was our market share, and we are targeting to increase that.
Yeah, so we have increased our market share. The growth has been really good in terms of also two-wheeler batteries where people are restarting, getting their two-wheelers going. And we believe we are now in the top 5 in terms of the overall two-wheeler segment. And we want to grow this business. And obviously, that's where our distribution network is now available across India. And we have put in technical backup others. So this is certainly going to be one of the areas where we want to gain market share. Manish, you want to add?
No, I think, yeah, it's covered. We have grown clearly double-digit in Q2, again on the battery side over last year. So the brand and the product is definitely getting a very good acceptance level at the consumer end, which is very good sign for us going forward. Thank you.
So just to extend the question, is it possible to give the absolute revenue number here that we got from two-wheeler batteries?
Sorry, your voice is slightly weak. Can you be slightly louder, please?
Yes, sir. So what I was asking was, is it possible to give the absolute revenues that we have generated out of the two-wheeler batteries business in Q2?
So usually we don't share the revenue, but we can say that we have grown close to 25% over last year Q2 in terms of volume.
Understand, sir. Just to, with respect to the SOIL partnership, wanted to understand, sir, so this ties up with your target of increasing market share in the PVs, right? Is that a right assessment? Your efforts are continuously in the direction of increasing market share in PVs and industrial oil currently.
Yeah, so as I mentioned, they have a very good acceptance of the products. And passenger car, as you rightly said, PV is one of the places where we think we can have a win-win partnership here.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ronak Sarda from Systematics. Please go ahead.
Hi, thank you for the opportunity. Sir, just looking to understand, how has been the raw material side, how's the cost behaving? And you mentioned pricing action during the quarter. What was that?
So as we started the month of July, August, the raw material cost was lower. We all know because of the surplus base oil available in the system, and because of lockdowns, vehicles lubricant demand was low globally. But as the lubricant demand picked up, and so the cost started moving up from August onwards. So raw material cost is firming up slightly in terms of base oil and other inputs. And obviously, as per the past trend in the industry, if there is a raw material cost increase which is beyond the tolerance levels, then the pricing action happens either by way of reducing schemes or recalibrating prices or taking the prices up. So that call will be taken as and when we are sure that the rising input cost trend is long term and is going to stay. Short term movements we usually don't capture in terms of pricing action.
So did you guys take any price hike in Q2 or maybe in October?
No, so you will remember in our first quarter call we had said that there were a lot of schemes to revive the demand in retail especially. So many of these schemes were rolled back from July onwards, but product segment specific schemes continued. And so yes, a bit of pricing action you can say by way of withdrawal of some of the schemes which were specifically for Q1.
Sure. And now how do we see demand moving here? Let's say from has the demand normalized, and should we expect the overall scenario to go back to let's say last quarter 3 of last year, or are we still seeing some challenges maybe on demand side or on the supply side? How are you looking at the business scenario now?
So obviously, Ravi, you want to take that or?
Yeah, so as I had told you, the overall annualized demand, we think there will be a double-digit degrowth. Again, taking it quarter by quarter, you have seen this quarter we have certainly seen demand being equal to pre-COVID level, except maybe segments like PCMO, factory fill is picking up. So I think the rest of the segments we are seeing close to a normal demand for our brand, and the way we are positioned in terms of our strengths of our brand, our network, the way we are innovatively approaching the market and looking at. So from the Gulf point of view, certainly the demand for these segments is good. As an industry, I think you will have to see quarter by quarter, and it's many factors in terms of obviously now we have come out of the lockdown, and there is some it is a semi-necessity and also to some extent some pent-up demand. But whatever the market for our brand and in our channels, we are seeing that demand has come back and should continue this trend for a few months. The July, August, September normally is a lower month in terms of the monsoon, but there was some pent-up demand as markets opened up, and the rest of the 3 quarters demand is good normally for lubricants. There are certain segments like infrastructure and construction equipment, factory fill, that will take some time, but most of the other segments are now looking normal as far as our brand and our positioning is concerned in the market.
Sure.
I must add right here, quarter to quarter we'll have to see how the demand conditions are.
Right. And challenges faced on the supply side, or that's moving on smoothly now given we have seen recovery in demand?
Anish?
No, so our plants are functioning normally. Both the plants are functioning normally in terms of production. As I mentioned, there are some base oil related demand supply conditions for different grades that keeps happening always. So there is no major challenge as far as the supply side is concerned.
Okay. And finally, you spoke about the.
Also like to add that ours is not a very labor intensive industry, so and our Chennai plant is a highly automated plant. So we are not seeing any production disruptions, etc., because of any labor issues or labor shortage or COVID. Both plants are functioning quite normally.
Sure. And the final question is on, you highlighted the point on cash flow, generated from the operations. So any plans, investment plans, which on the new product side over the next maybe year or so, or how do you plan to utilize this strong cash generation? Thank you.
Yeah, so we have mentioned in the past, we keep looking at the opportunities in terms of both M&A in certain sectors where industrials and coolants, etc., where we want to grow our market share more aggressively. And at the same time, we are also investing in, the battery business, which is growing. And we are trying to localize some production there as well, which we have highlighted earlier. And as I mentioned, if there are, no other business-related deployments required for a foreseeable future, then obviously we have options of increasing the payouts as if the board decides. And all the options are open thereafter.
Sure. Thank you and all the best.
Thank you. The next question is from the line of Manav Agarwal, an individual investor. Please go ahead.
Thank you for the opportunity and congratulations for the result. Sir, I would like to know the capacity utilization for Q2 FY21.
It's around 75%, both plants put together.
Okay. Thank you, sir.
Thank you. The next question is from the line of Sabri Hazarika from MK Global. Please go ahead.
Yeah, good afternoon and congratulations on good set of numbers. I have a few questions. Firstly, if I look into your pricing quarter on quarter, so there was a dip from Q4 to Q1 that was because of certain schemes that were given to support the consumers during COVID. Between then and Q2, there has been some improvement. But the improvement is we are still not back to say Q3, Q4 levels in terms of realization. So how has the competition behaved in this scenario? I mean, they are also everybody is taking a very controlled pricing intervention, or competition has taken it more than. Just wanted to know how the pricing has been across the industry between these 2-3 quarters actually.
So thank you, Sabri. I think I mentioned earlier that some of the schemes which were for Q1 has been rolled back, but certain product-specific or segment-specific schemes continued. And all realization is also a fact, the overall mix and in terms of B2C, B2B. As I mentioned, B2C was 61% this quarter. In spite of a very good coming back, it was still not around 63%. So and within that, PCMO is still slightly lower as compared to what it was. So all these factors, continue to play their role in overall realization. And there is no particular pricing action. We cannot comment about competition. But overall, we are quite hopeful that we will be able to, maintain the margins in the band what we have been talking about, which is 16 to 18% EBITDA margin band. So that and with that growing volumes is what our strategy has been in the past, and we continue to focus on that.
And to add to what Manish is saying, Sabri, you see the demand sensing in terms of which segments to sell. Again, for that also, for example, agri was very high in Q1. So wherever the demand sensing is there and the mix will change slightly, that will also have an impact on the overall, realization. So you have to obviously look at those segments, quarter on quarter, month on month. So that also has some impact in terms of how you see the realization.
And also, factory fill volumes have come back to 5% levels, which was lower, much lower in Q1 and Q4. So and these are slightly lower realization businesses. So all these have the impact. I think we look at the overall EBITDA delivery in terms of maintaining the margins. We have been able to do successfully.
Right. So in Q1 it was 59-41%, right? The B2C, B2B.
That's right.
Okay. And on the margins, you said that you still maintain the 16 to 18% EBITDA margin guidance. So there is nothing, no increase in that, considering you have done 19% in this quarter?
No, because as I mentioned, the input costs are rising depending on when the pricing action which happens in the market.
Right.
There is always a lag effect and timing is there. Right. And we have to continue on seeing the market conditions towards overall improving our mix. So as a guidance, we maintain that, and we have been always over-delivering. In the past we have done that.
Right. And you said that your schemes, the rollback of your scheme, like the product-specific schemes, are still there. So it will be gradually roll back going ahead as the demand conditions improve, right?
That usually happens. We have to really see how the overall market condition and the competition is behaving.
Okay. And any institutional order, anything you are expecting, or it's mostly like it's a core business right now?
No institutional business we are expecting in this year or till March.
Okay. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Aditya M. from HDFC Bank. Please go ahead.
Yes, sir. Just one quick question is, with this S-Oil, is there a royalty arrangement, or what is the sort of fees we will have to pay to S-Oil to use their brand name?
Sorry, Aditya, these are we have signed an NDA with them in terms of arrangements. So it will be difficult to disclose the full details, but I can tell you that top line and bottom line will flow into, because it's a sub-segment for us, and there is no separate entity or JV which has been created, so that flows into our P&L.
Right. So the distribution network will be set up by us. That's essentially what you're...
Yeah. So it's a manufacturing and marketing. It's a complete end-to-end tie-up. It's not only about manufacturing or only about marketing. It's an end-to-end partnership.
Oh, okay. Congrats on that.
Thank you.
Thank you. The next question is from the line of Salabh Agarwal from New Ball Capital. Please go ahead.
Hello.
Yes, we can hear you, Mr. Agarwal.
Good afternoon, everyone, and congratulations for the good set of numbers.
Thank you, sir.
So a couple of questions. Just again on the S-Oil thing, if you can just explain again, what benefit do we get in creating another brand and distribution in the market where we ourselves are competing and trying to, compete against a bigger competitor in the market? So what benefit do we really get in creating another brand in the market? That's the first question, obviously.
Ravi?
So you see, S-Oil, as we told you, we have a long-term partnership with them, which is on base oil.
Correct.
So it's a very broad relationship which has been nurtured and very strong relationship for us. So as the brands come into India, they definitely look at distributing and getting the brand in the Indian market. And, I think for us, the synergy is definitely on the relationship. And they have got some strong products in PCMO. We are also developing our PCMO range, as you know. So there is definitely products which are there. And they have a number of products which are focused on high quality, the Korean OEMs, the other product usage. So it's a multifaceted range they have. And we also believe that, as we look into various areas of our distribution, this is another network which will be set up, right? It's a different network, as you also mentioned it. So there are ways to access the market together and grow together, I think, in the market and maintain the identity of the product. And as we also mentioned, the OEM relationships is also a good win-win situation if we can develop those together in India.
Okay. If I may ask you, sir, if you could explain, is S-Oil supplying a bulk of our base oil raw material?
So they are one of the key partners for us in terms of base oil supplies. It's not 100%, but obviously they are a key supplier to us in terms of our overall base oil requirements, and for last many years, in fact decade. And they have a complete range of base oil. That's good about them, that they have all Group 1, Group 2, and Group 3 base oils. So that's one of the few refineries which has actually the complete range. and we have been partner with them for many years. So that's a good advantage for us overall. And I just want to add on this partnership that we are still overall a 5 to 6% market share. So we have a lot of headroom to grow. Either we on definite one brand as well as these partnerships.
The prime brand for us is the Pride brand or the Gulf brand, right? And which is where you guys have been focusing for so many years. So maybe this will lead to something, but I'm still not able to understand why we would launch another.
Pride, just to add here, Pride brand is only for motorcycle range. It's not our complete mother brand or.
So I can just add here, Mr. Agarwal. You see the whole industry, there is diesel engine oil which goes into commercial vehicle and tractor. Okay.
Sure.
And then there is motorcycle, then there is passenger car, then there is other oils, and then there is whole range of industrial and other products which are hydraulics and other.
Correct.
You see the whole industry is very large. We are quite strong in motorcycle. We are quite strong in the commercial vehicle products, and we are also now strong in the tractor segment, which is with Mahindra and our own products. So everywhere we have Gulf products also. So Gulf Pride is a strong motorcycle product. We also do motorcycle products for Bajaj. You see, they have a genuine oil. So right across each segment, there are various parts of the segment which have OEM, which have your own brand. Like in tractor, we have our own brand. We also have a brand with Mahindra and Swaraj. So like this in PCMO, where we have lower market share, definitely you see S-Oil has a brand called 7, which has very strong penetration of a number of OEMs right across in various markets. And also they would be here and their products are there. So all this augurs well in terms of expansion of a particular segment. So it is not that Gulf Oil is only focused on one or two segments. We have to play both in B2C, B2C, and this has been our strategy to look at segment growth. And we still believe there's a lot of room in the PCMO and many other segments, including motorcycle, scooter, etc.
So will it be fair to say that S-Oil 7 will be more concentrated or more focused for the PCMO sub-segment?
So we will definitely have to use the strengths of each of the brands like they have. But you see, we are very small in this segment even now, overall, in PCMO.
Sure. So the second question is, if we look at, the battery business and how the battery business has been growing, and if we look at the, the numbers that get reported in the annual report, the gross margins, because we report the numbers in terms of how much we have bought the battery for. So the gross margins have been consistently coming down last couple of years. I'm not sure if maybe I'm missing on something. But the question is, so FY18, we were reporting for almost 32%. Before that, we were around 22%. And FY20, we reported around 9.5%. So is it something that am I missing, or would you want to clarify on that?
You see, I'm not sure where from you are getting gross margin for battery business alone.
Because we did the breakup of sales, and the bought out product is also given separately.
So for us, bought out products also include greases, etc., because we don't manufacture greases, and many of the other categories as well. So coolants, some of the coolants we buy. So it's a mix. It's not only about batteries, okay? And the gross margins have been disabled in the battery business, and it will further improve once we are in a position to localize the production, as we have been targeting for the last 1 year, 1.5 years now.
Okay.
So Mr. Agarwal, let me tell you, the reason we got into this business many years ago is there is synergy with our retail, and we also use our brand Gulf Pride. So definitely with the motorcycle bike owner, this is a brand which is now available in two-wheeler batteries and lubricants. So there's a synergy for which we got in. And we are working towards localization also, obviously, because we also want to develop a local source, strong local source.
Sure. No, that helps, sir. And so on the BS6 oils, is our BS6 oils being sold at a different price than what the previous range of oils were sold at?
So the BS6 oil is definitely a much more better oil and has more technology in it. Right. So the pricing is definitely going to be higher than the normal oil which is selling in BS4.
So currently, the BS6 is only going for factory fills, or it is also
the factory fill and the new vehicles which come for the warranty service in the franchisee workshop. So it is just started. As you know, last year there was a challenge when BS6 came. So that demand is now going to go up as the more vehicles are sold in BS6. To start with in the franchisee workshops and then the aftermarket.
Okay. So can we say that BS6 is somewhere between the earlier range of oils and synthetic oil?
Sorry, can you repeat the question?
The BS6 oil range is somewhere in between the earlier range of oils that were there and synthetic oils.
No, see, synthetic definition is quite wide. So there are mineral-based synthetics and semi-synthetics. So the BS6 oil is a much superior oil to the earlier oil which is used in BS4. So it requires a different formulation.
But it is still a mineral-based oil, right?
That's right.
Okay. And sir, at the industry level, what would be the contribution of the synthetic oil in the industry? Or say, if you can get a number, what would that be?
You see, again, the definition of synthetic, semi-synthetic, this is definitely is an area which we can probably offline go into. So it would be single digit now, and different studies show different ranges in different segments. So if you talk about fully synthetic, which is PO aster based, that is just very small single digit. But if you take semi-synthetic synthetics, then it goes into a higher thing. So it depends how you define it. But basically it means that there's a mineral synthetic and then there's a PO aster based synthetic. So those are, I would say, single digit in terms of percentage.
Okay, and that basket is increasing, say, last couple of years?
Semi-synthetic and synthetic is progressing well.
Okay. Great, sir. Thank you for taking my questions and all the very best.
Thank you, Mr. Gal. Thank you.
Thank you. The next question is from the line of Manikanta Gare from Axis Capital. Please go ahead.
Yeah, thanks for providing me the opportunity again, sir. So just wanted to clarify, the A&P as a percentage of sales is 3% in Q2. Is that what was mentioned?
Yeah.
And the usual range is 6 to 7%. Right?
Yeah, 5 to 7% is what we have been doing over the last many years.
Okay, so despite the increase in expenditure, the promotional expenditure with respect to IPL and CSK, still that is at 3%. So how do we see this increasing for the rest of the year? And are we structurally reducing that by 1 to 2% now?
Because you see, as Ravi mentioned in his one of the answers, that the BTL activities are still very low because the movement of the people we have restricted because of the safety of employees and all. So all the BTL related activities are still at a very low level, and that's large part of the A&P as I spend. I mean, at least an equal part. So that will pick up as the markets open up and the threat of pandemic reduces and finally when the things are normal. So it's not that structurally we are trying to reduce, but it's because that BTL activities, etc., are lower currently.
Sure, sir. So just one more question here with respect to cost only. So with one more quarter gone by, what are the areas where we are confident that yes, structurally we are able to reduce the costs? We will be able to reduce the costs going forward.
You see, we have highlighted this in many earlier calls that as a growing organization, our focus is on volume growth and with maintaining a decent margin, which is stable margin, which we have been able to do successfully and get market share. We are not particularly targeting any cost, but since many of the pandemic has taught us, all of us, different lessons, I'm sure there will be opportunities or avenues in terms of travel, which is usually a large part in any kind of industry, FMCG type of industry. And of course, rental, etc., we have to calibrate if people, work from home. There will be supply chain related, things. We are trying to do mother warehouse concept or central distribution concept. In 4 regions, we are building large warehouses through outsourcing. One of them in South is already started with Mahindra Logistics. So all those will result in definitely, overall concentrating on certain areas of the cost which we want to recalibrate.
Thanks, sir.
Not targeting any specific item, but of course, there is not going to be a significant increase in these many of the fixed costs, and hence the concept of operating leverage will keep on coming and will keep on playing as we increase our volumes.
Sure, sir. So this large warehouses that you have mentioned, is there any possibility of giving any investments required there?
No, it is a variable.
Okay. Last question, sir. Market share in after...
Mr. Gare? So sorry to interrupt, but for any follow-up, request you to rejoin the queue, please. Thank you. The next question is from the line of Amit Kadam from Canara Robeco Mutual Fund. Please go ahead.
Yeah, hi, sir. Good evening. The first question is that just want to understand, so is there a seasonality in our business where H2 generally in India also is much better than H1 as we come out of the monsoon? So that applies to our lubricant business also, where the volumes in H2 are generally better than H1, and with COVID lockdowns like now minimizing and those we are coming out of it, it will actually act as a tailwind for our H2 volumes.
Ravi, you want to take that?
Yeah, so I think, Mr. Kadam, generally if you take a normal year, July, August, September, because of the bazaar market and all, generally the consumption is lower. This I'm talking about a normal year, okay, monsoons.
Yes.
So generally you know that, and then typically you have festive season. But if you take 90-95% of our sale is replacement lubricant, so it's not directly to do with the new vehicles. You'll appreciate that, right? And then industry. So generally you see July, August, September is usually the lowest. But if you take what is happening around us today, there is a bit of pent-up demand which once the unlocking happened and people had personal mobility, industry came back, demand conditions improved. Earlier it was agri, now it is other segments right across. So we'll have to really look at this year as a unique year, no? Because things are going to be, as we say quarter on quarter, what is going to be the demand sensing? And generally for us, the rest of the year, if you take October, November, December, Jan, Feb, March, also it is a lot to do with the channel business, the other initiatives which happen, like, there is obviously distributors who buy more in terms of incentives towards the year end. So second half is a good half in a normal year, but we have to be a little prudent now because we have to still see how the demand trend continues quarter on quarter. And we are hopeful that this second half H2 is going to be, as in a normal year. But this year has not been normal. You'll appreciate that in the full H1. And so I think we'll have to see how it goes. In a normal year, July, August, September is a slightly low quarter. But not this year, I would say, because this year you did see some pent-up demand coming in. Manish, you want to add?
Yeah, so basically, just to add that infrastructure is heavily linked to monsoons, etc. So that usually is low. But if the government spendings are directed towards infrastructure and the projects restart, because the labor issue in some of the infrastructure segment continues, and if those projects kick-start, usually that is October to March is a good season for infrastructure projects and delivery. So we are hopeful on those, and of course factory fill also started signs of improvement. So that's also helpful going forward.
Okay. So just wanted to understand in that particular thing is where the 29.5 million liters what we have clocked, and if the COVID really does not surprise us or India and the world second time, in that case, in fact, we can really build on our volumes from here because generally or usually in normal conditions, H2 volumes are much better, scenarios are much better. So maybe this 29.5 million liters may not be the peak or the high of FY21. We could actually, with our efforts and with the market buoyancy, we could actually do much better numbers in the subsequent quarters also.
You're right. Plus also there is as Ravi mentioned, there is some pent-up demand which has been catered in this quarter, which has gone by.
Okay.
But at the same time, there will be low base effect as we move towards quarter 4 of previous year when we saw a dip in the month of March, especially when the lockdowns were announced in the last fortnights. So that also will have a base effect impact. So overall, yes, we are looking at a positive H2.
And overall the industry, as I mentioned earlier, might be double digit down overall, annualized. But as far as Gulf we are concerned, we are seeing that we are able to, get our performance to a better level. So we'll have to see every quarter, and hopefully we see all the segments. Manish mentioned infrastructure as one. We have to basically look at how the different seasons, different segments will grow for us, and we are quite happy to see the trend that has happened, and we hope this will continue.
Okay. And my just second question is on the export outlook. So I guess last time when we spoke, so there, like, what is the outlook? What has been happening in this segment, and how do we see this growing? What could be the trend in this segment?
So for us, the exports is to neighboring countries.
Yeah.
And the Gulf being a global brand, they have their own. Every entity has their own arrangement in terms of procurement. But what we are exporting is mainly to some of the neighboring countries, Southeast Asian countries, and we are seeing a good traction in exports as we have delivered in the last 1-2 years, and with the capacity available now in Chennai, as we mentioned earlier also, we are looking at continuous opportunities in export, and it has come from 2-3% of our segment mix. Now it is close to 5% in terms of our overall segment mix.
Yeah. So right. So any plans to expedite or grow this like then this particular segment and with the usual standard? Because my question was related to, because we, as you mentioned, we are 75% utilization. There is ample of spare capacity. So if at all, if India is little slow in recovery because of the cases, that other geographies may have this better prospect, and just to fill up the capacity and improve the contribution profit towards recovering the fixed cost, it could be a better optional or alternative in the COVID scenario. Right.
No, so for us, the exports growth depends on the growth of lubricant sector in these geographies, in these countries where we are supplying to our entities largely. And some of the OEM products also we have started exporting. So all these geographies are impacted by COVID. Some of the OEM products, actually we have gone beyond Southeast Asia and we are supplying right up to Africa and Latin America. But all markets are impacted by COVID. So in the short term, we are not seeing any major, demand coming from these geographies for exports. But as the market normalizes, yes, the export potential is going forward is good on a longer term basis.
Okay. That's it, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Ajay Thakur from Elder Capital. Please go ahead.
Hello. Thanks for taking my question. I have two questions. First, just want to check on the volume number. I joined a bit late, so maybe I might have missed that number. And secondly, just wanted to check on your views on the factory fill for the second half, given the fact that there's been quite a bit of uptake, and also the fact that many of the OEMs are talking about, kind of normalization or near normalization of the demand trend. So in that context, want to check on that front as well.
Yeah, so our volume for the quarter is 29,500 KL, which we mentioned Ravi mentioned in the opening remarks. And for us, OEM supplies are largely to commercial vehicles. So while we have seen significant improvement in the last 2-3 months in terms of their production, to go back especially for heavy commercial vehicles, to go back to earlier normal levels, I think we are still maybe some time away. So we are guided by the OEMs in these in that area. So we do not have any our own prediction or our own forecast. But as we see the last 2-3 months, especially last 2 months, we are seeing good demand from OEMs, which is largely concentrated to CVs for us.
Okay.
So while the PV numbers in terms of production etc. have gone up significantly, the CVs are still yet to recover fully.
Okay. That's quite helpful. Thanks.
Thank you.
Thank you. The next question is from the line of Prayesh Jain from Yes Securities. Please go ahead.
Yeah. Hi, sir. Just one question. Again, this is on the cash part of the business. We've seen that your other income now contributes to almost 20% of the PBT, and this is almost doubled over the past couple of years. So first of all, what is the reason for the growth in other income apart from the investment income that is coming across? And secondly, what would be your strategy to utilize cash going ahead?
Yeah, Prayesh, so I have already replied to your second question.
Yeah.
In one of the earlier replies.
Yeah.
Utilization of cash. And obviously, as I mentioned in one of my answers, that we have generated significant operating cash flow. Hence, the interest income has gone up.
All right. Okay. That's it from my side.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I now hand the conference over to Mr. Ravi Chawla for closing comments.
Thank you, Mr. Jain. First of all, let me thank all of you ladies and gentlemen for joining us in the call, and we hope you've been able to answer your questions. We're sharing with you what we've been doing and at the ground level. Certainly, we've been looking at the current demand conditions, and this gives us a lot of optimism going forward. We will continue to exercise our cost optimization tightening with the tightening input cost scenario. Also looking at market share growth opportunities, some of you will alluded on. So we continue to do that. And certainly the strength of our brand, our product offerings, the network and team's passion have come to the fore as key differentiators that reflect in our company's continued outperformance. We hope we can look at the next quarter and how we can maximize and deliver strong results again. Thank you so much for your time, and be safe, and hope to see you soon. Thank you.
I would, Ravi, just want to add a disclaimer at the end that some of the discussions may be forward-looking in terms of our discussions, and the actual results may vary from what we have discussed depending on the evolving situations in the market. It's just a disclaimer from guidance point of view. Thank you, everyone.
Thank you. Ladies and gentlemen, on behalf of Yes Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.